Welcome to the deep dive. You've given us the sources on IREN, that's Iris Energy, as they used to be called, and well, our job now is pretty straightforward.
Yeah, we're going to dig into this material together.
Exactly. Get you up to speed, fast on what these sources say about IREN. We pull out the key stuff, the things you really need to know.
And remember, all the original sources, they're listed down in the description if you want to go deeper yourself.
So the big question that kind of jumps out from all this material about IREN is this. Can a company that really made its name mining Bitcoin, can it actually pivot successfully?
And not just pivot, but become a major force in the AI data center world, which is booming.
Okay, let's unpack this.
What's really fascinating here, I think, is that this isn't just some minor adjustment.
No, it's huge.
It's a really ambitious strategic shift, right?
Yeah.
They're trying to use what they learned building power-hungry crypto mines, but for a totally different market, AI.
And just a quick note, if you want your deep dive prioritized, maybe a stock ticker you're watching or earnings you need analyzed, Stock Analytics AI members, for just €4.99 a month, you can give us a ticker and we'll put your request at the top of the list. So, like and subscribe to Stock Analytics AI.
Definitely worth checking out.
And absolutely stick with us through this deep dive, because once we've gone through the business, the management, the financials, the risks, all that stuff, we're going to come back to that first question and really tackle the one big challenge that seems to be hanging over this whole ambitious move by IREN.
And hey, subscribing to the channel helps us make more of these deep dives. Just, click the button.
Absolutely.
Quite cool.
So let's jump in. What is IREN? The sources describe them as owning and operating next-generation data centers.
And right off the bat, they stress this key point: 100% renewable energy powering these sites.
Right. They started back in 2018, went public in 2021, and did that rebrand from Iris Energy to IREN just early last year, 2024.
And their core strategy, basically, is finding locations with lots of cheap renewable power, and then building these big energy-efficient data centers. The idea is low running costs plus that green energy angle.
Okay, so how do they actually make money? The sources break it down into two main streams. The biggest one, historically and still now, is Bitcoin mining.
Right. They mine Bitcoin, get the block rewards, transaction fees.
And then usually swap it for, dollars or other regular currency. The numbers are pretty big here.
Yeah, the sources show, $184.1 million in Bitcoin revenue for the last fiscal year?
Exactly. And a really strong $141.2 million in just the third quarter of their fiscal 25. So mining is still the engine for now.
But here's the pivot. The second stream, AI cloud services.
This is a new focus.
Yeah, providing high-performance computing, or HPC, specifically for AI tasks, using their infrastructure. Now, the revenue here is much smaller today.
Right, like $3.1 million in FY24, $3.6 million in Q3 FY25. Tiny compared to mining.
But the key number the sources highlight is the annualized run rate. Based on the AI gear they had running in May 2025. That run rate was $28 million.
Wow. Okay, so $28 million annualized compared to over $140 million for mining in one quarter. That really puts it in perspective.
It does. It shows AI is growing fast, but from a small base. And the sources are really clear. They've hit pause on expanding Bitcoin mining further.
They're stopping at 50 exahash per second.
Right. To redirect that capital into building these specialized liquid-cooled AI data centers.
Tells you everything about their priorities right now.
Exactly. So their main products, still Bitcoin mining with ASICs, those specialized chips. But increasingly, it's AI cloud services.
Using those high-end NVIDIA GPUs, the H100s, H200s.
Yeah, and they even do white labeling, basically renting out compute power under other brands. And the infrastructure itself is key.
Designed differently, right, for more power.
Way more. They talk about racks handling over 70 kilowatts. Compare that to maybe 15 kilowatts in a traditional data center. And a huge focus on liquid cooling.
Which you need for the newest, hottest GPUs.
You absolutely do.
Okay, scale, market position. Market cap was hovering around, $2.28 billion in early June?
Somewhere around there, yeah. And they've got sites in Canada, BC.
British Columbia?
Right. But the big growth story, according to these sources, is definitely Texas, USA.
So the BC sites are kind of stable, renewable mining?
Pretty much. But Texas is where the action is.
Yeah.
Their Childress site, it's huge. 750 megawatts total potential capacity.
Wow.
A lot of that's already running for mining, another 150 million W coming online very soon. And the key there is super cheap power.
Like 3.3 cents per kilowatt hour in Q3. That's low.
Incredibly low. And they also play in the Texas Grid's demand response programs, which helps manage load and can generate revenue.
And the AI part starts at Childress too, right? With Horizon 1.
That's it. A dedicated AI facility, 50 to 75 megawatts of IT load. It's being built now, expected later this year.
Q4 2025, maybe second half.
Somewhere in there.
Yeah.
And it's specifically designed with liquid cooling for things like NVIDIA's next-gen Blackwell GPUs.
But then there's the really big Texas plan, the Sweetwater Hub.
Oh, yeah. This is the mega project. 2 gigawatts planned in total there.
2 gigawatts!
Yeah. Sweetwater 1 is 1.4 gigajoule, starting to come online April 2026. Sweetwater 2 adds another 600 milligigajoule later on. It's a massive expansion.
So across all sites, their total power portfolio, secured or in development, is over 3,000 millidBU.
Or 2.91 gigabit, yeah. That's the figure in the sources. Huge potential scale.
And back on the Bitcoin side, they were aiming for 50 EHs by end of June 25, averaging around 38.4 in May.
Right, and if they hit that 50 EHs, given the global network size mentioned,
around 800, 900 EHs.
They'd be looking at something like 5.5% to 6.3% of the entire global Bitcoin hash rate. That's a significant slice.
So summing up their value proposition, it really seems to be this next-gen data center idea.
Yeah, built on pillars, 100% renewables. Optimized for power-dense computing, especially AI with liquid cooling, experienced team, strategic sites with low-cost power, big focus on Texas.
And that flexibility of the dual-purpose infrastructure.
Yes.
So, simple question from the sources. What do they do? Build and run renewable data centers? How do they make money? Mostly Bitcoin now, but increasingly AI cloud services. Dual strategy.
Makes sense. Now, industry trends. Bitcoin mining, it's post-halving.
Rewards got cut.
Right. So the pressure is intense on efficiency, lowest power cost, newest machines, run lean. Competition's fierce too. Global hash rate keeps climbing.
And this is where that diversification trend comes in, the one IREN is writing.
Exactly. Miners realizing their infra can do other things like AI HPC. Plus, institutional money likes the ESG story, the renewable angle IREN pushes.
And regulations are playing a role too, like those Texas rules about being a large, flexible load.
Yeah, shapes how they operate.
Yeah.
Then you look at the AI HPC data center market.
It's just exploding, right? The numbers are huge.
Totally. Sources talk about the HPC market going from maybe $57 billion now to over $87 billion soon. HPC as a service maybe $41 billion to $72 billion by 2034.
Driven by AI needing massive compute power.
And needing specialized infrastructure, high density, liquid cooled, perfect for those powerful new GPUs.
Plus the general move to cloud, the focus on sustainability.
Great.
It all feeds into this.
It really does. It creates this environment where IREN's pivot looks, well, potentially very well timed.
Okay, competition. In Bitcoin mining, it's the usual suspects, right? Mara, Riot, CLSK.
A lot of the big public miners.
Mm.
And many of them are also looking at AI, diversifying.
So how does IREN stand out there?
According to the sources, that 100% renewable claim, they're focused on really large-scale, low-cost sites and just how committed they seem to this AI shift.
And in the AI HPC space, that seems tougher.
It is. You've got the hyperscalers, AWS, Azure, Google. You've got specialized AI cloud folks like CoreWeave, Lambda Labs.
Some of whom also started with crypto gear, interestingly.
Right. Then other miners moving into AI, plus traditional data center operators.
So IREN's angle there is?
Based on the sources. Low-cost power advantage, speed of deploying liquid-cooled sites, the Texas hubs, and that dual market flexibility may be giving them an edge.
What about the rules, the regulatory stuff? Canada first, BC.
Yeah, British Columbia. The courts there upheld limits on giving new electricity connections to crypto miners.
So that kind of protects IREN's existing sites there, maybe? Creates a moat?
Possibly, but it definitely caps future mining growth for them in BC. Pushes expansion elsewhere.
Which brings us back to Texas, generally seen as more favorable, right? Deregulated energy.
Yeah, but it's not a free-for-all. Scrutiny is increasing. Big miners like IREN have to register as large, flexible loads, help with grid stability.
They do that already.
Right. And there are other things bubbling up, like potential fees for grid studies, local concerns about energy and water use.
But still, the sources present Texas as the main growth engine for IREN, despite the growing oversight.
Definitely. Because of the resources and the market structure there.
Okay, barriers to entry, high for both.
Absolutely. Mining needs huge capital for ASICs, for the sites.
Yeah.
Securing cheap power is getting harder. Profitability is under pressure. Tech complexity, regulations, supply chains, lots of hurdles.
And for AI HPC, even higher.
Arguably, yeah. Even more capital-needed facilities, plus those incredibly expensive GPUs. You need specialized kit, liquid cooling, for maybe 200 kilowatt racks. The power demand is insane.
I saw a note, maybe Goldman Sachs, saying AI data center power demand could jump 165% by 2030.
Something like that. Huge numbers. Plus, you need specialized talent, and just getting large grid connections can take years.
So how does IREN overcome these?
Their big claim is securing that large-scale, low-cost renewable power early, especially in Texas, giving them a time-to-power advantage.
Because getting new power connections is slow.
Exactly. Plus, they highlight their in-house development team and leveraging their existing sites. That time-to-power thing in Texas is framed as a big differentiator.
But maybe not permanent.
Right. It's an advantage now, but others will catch up eventually.
So bottom line on the industry's future from these sources.
Well, it's positive for both, but changing. Bitcoin mining matures, focuses on efficiency. AI HPCs in hypergrowth. IREN's trying to play in both, using mining cash perhaps to fuel AI growth.
Okay, let's shift to Chapter 2. Management. Who's running IREN?
Co-founders are Daniel and Will Roberts. Sources mention their backgrounds span finance, infrastructure, renewables, digital assets.
And the broader team?
Highlighted as having a track record, delivered supposedly over $25 billion in projects globally. Presented as experienced.
And achievements under their leadership.
Well, they definitely scaled the mining side rapidly. That 40x hash rate growth figure was mentioned. And they initiated this big AI pivot, the Horizon 1 build, the Sweetwater plans. That's all happening on their watch.
But they face some challenges too, right? The sources mention a few things.
They have. Okay. Back in late 2022, there were those SPV defaults.
Special purpose vehicles, like separate project companies.
Exactly. 2 of them defaulted on over $100 million in equipment loans. IREN said the debt was non-recourse to the main company. Did bail them out. Framed as risk management.
But maybe not great optics.
Optics were mixed, yeah. Then, July 2024, the Culper Research short seller report hit.
Questioning their AI claims, site readiness, stock dropped.
Right. And investor lawsuits followed, alleging misstatements. The company response initially seemed a bit cautious, talking about intellectually honest discourse.
But there's an update on the lawsuit.
Yeah, positive one for IREN. The sources recently noted the lawsuit was dismissed. That removes a big legal uncertainty.
Okay. And there was also a financial restatement.
March 2025. Described as technical reclassifying Bitcoin sale proceeds in the cash flow statement after an SEC review. Said no impact on profit or cash position.
Still, restatements need careful handling, communication-wise.
Absolutely. But having navigated defaults, a short report, and a now dismissed lawsuit, you could say management has shown some resilience.
How about transparency, communication?
They stated commitment to it. Monthly updates, quarterly calls, Q&A sessions. The response to Culper was maybe a bit indirect at first, but the upcoming move to U.S. GAAP accounting and becoming a U.S. domestic filer from July 1st, that's seen as boosting transparency.
And their ethical reputation, tied heavily to the renewable claim.
Very much so. 100% renewables. Social responsibility that's core to their image. The Culper allegations and the SPV defaults did raise questions for some, though. So ongoing transparency and execution are key there.
So, that key management question. Honest, capable, shareholder-oriented, based just on these sources.
Capable. Seems so. Scaling mining, pivoting to AI, landing huge power deals, that takes capability.
Honest. They say they are, but past events brought scrutiny. Needs consistent delivery and clear communication.
Shareholder-oriented. They frame decisions that way. The AI pivot for higher value, non-recourse debt, protecting the parent co, reinvesting for growth.
But the dilution.
Right. Significant share dilution means those big investments absolutely have to generate strong returns to benefit shareholders. Handling crises shows experience, though.
Okay, Chapter 3, Financial Health, Key Metrics. Market cap around $2.3 billion.
Yep. PE ratio, tricky. TTM is negative, showing past losses.
Minus 43x to minus 63x, something like that.
Right. But the crucial point is the recent quarters. Q2 and Q3 FY25 showed positive net income. So forward PE might look better based on analyst hopes.
That's the turnaround story they're pitching. And revenue growth.
Very strong. TTM year over year over 128%. Q3 FY25 revenue hit a record $148 million, up 172% year over year. Strong growth momentum.
Margins. Gross profit looked amazing.
Extremely high, yeah. 9,100% TTM. Reflects that low-cost power advantage. Operating and net margins TTM were negative.
But Q3 FY25 turned positive.
Yeah, Q3 operating margin around 26%, net margin over 16%. That's $24 million in net profit for the quarter, showing profitability is possible at scale.
And those hardware margins mentioned 76% mining, 98% AI suggest good unit economics.
If they can keep costs low and get volume, yes. Very strong potential unit profitability.
How's the balance sheet look? Debt.
Debt to equity around 0.39 as of Q3 FY25. That's after raising $440 million in convertible notes. Generally seen as manageable, especially given the heavy investment phase.
Free cash flow, though, still negative.
Oh yeah, heavily negative on a TTM basis. Figures like negative $388 million to maybe $713 million were cited.
But expected, right? They're building stuff.
Exactly. Massive CapEx phase. Negative FCF is normal here.
Price to book, around 1.1 to 1.6x.
Roughly 1.5x based on Q3 equity. So markets valuing them at a moderate premium to their book assets.
So pulling it together, profitable, strong balance sheet.
Getting there on profitability. Recent positive quarters are key. Balance sheet seems relatively strong for their growth stage manageable debt. Access to funding noted. They had $184 million cash in Q3 plus that ATM facility. Recent profits are encouraging.
Financial stability, earnings consistency, too early for a long track record.
Yeah, young public company. History of losses, but the recent positive trend is the focus. Revenues growing consistently.
Dividends.
Nope. Reinvesting everything into growth, especially the AI build-out.
Debt management seems okay. DE, around 0.39.
Seems manageable. That $440 million convertible note is the main piece. Past SPV debt was non-recourse. They mentioned exploring other debt types, too. Getting that convertible done shows market access.
Working capital, some sources flagged it as tight.
Yeah, current ratio figures mentioned were low, around 0.4, 0.5 by some counts, though there seemed to be a discrepancy in the sources maybe. Quick ratio, also lowish.
This suggests tight short-term liquidity.
Potentially. But offset by that significant cash balance, the ATM facility, and the fact they generate cash daily from liquidating Bitcoin.
Okay, so volatile earnings, excessive debt.
Earnings have definitely been volatile, tied to Bitcoin improving lately, and AI aims for more stability. Debt at 0.39 DE doesn't look excessive for this kind of massive growth plan. The big financial question remains, will the AI investments pay off enough to justify the capital cost and the dilution?
All right, second half. Chapter 4, market sentiment. How's the market feeling about IREN?
Seems like cautious optimism, mostly focused on that AI pivot potential.
Recent news probably helped. Record May revenue, strong Q3.
Yeah, those operational updates are positive, even if Q3 slightly missed some analyst targets. Stock's been bouncy, though. $5 to $16 range over the last year shows volatility. The renewable focus is generally liked.
What are analysts saying? Price targets.
Overwhelmingly bullish based on the sources. Consensus is strong buy or buy across multiple analysts. Average price targets are way up there, $16 to over $20.
Implying like 100% plus upside from where it was trading, $8 and $59 range.
Exactly. Huge potential upside implied. But the range of targets is wide, from maybe $6.50 on the low end to $33 on the high end.
Shows disagreement on execution risk. Valuation.
For sure. Different views on how likely they are to pull off this massive shift. Recent actions included target bumps from H.C. Wainwright, B. Riley, Macquarie, and a J.T. Morgan upgrade. So analysts generally seem to buy into the strategy.
And recent news impact. Positive updates good. Maybe the Q3 mistempered things slightly.
Probably. The consistent messaging about pausing mining for AI is key. That new tariff dispute, potential $100 million liability, is a negative headline risk, though.
But the lawsuit dismissal is a definite positive. Removes an overhang.
Absolutely. Oh, and short interest was mentioned, around 13% afloat.
Yeah, 2.5 days to cover. So a decent number betting against it, but maybe not super crowded short yet.
Right.
Chapter 5, ownership. Sources didn't have a ton here, right?
Very limited detail beyond mentioning the co-founders Daniel and Will Roberts as leaders.
But one key point was highlighted.
The dilution.
Yeah.
Sources state shareholders have seen significant dilution shares outstanding, up 65% in the past year.
Which is pretty typical for growth companies raising cash via things like ATM facilities.
It is. But it means the value per share really hinges on making those investments profitable. It's a crucial factor for existing shareholders.
Okay, Chapter 6. Let's synthesize a SWOT, strengths, weaknesses, opportunities, threats, using only what we found in these sources.
All right, strengths, S. 100%. Renewables. Big differentiator. Secure huge amounts of low-cost power and land through GW, especially in Texas, giving that time-to-power edge. Experienced leadership, in-house development capability noted. The dual market strategy provides flexibility, developing specialized AI infra. Liquid cooling. Improving financials, recent profits, high hardware margins. Operational efficiency seems good.
Weaknesses. W. History of net losses. TTM, still negative. Big negative free cash flow from CapEx. Potentially tight working capital, flagged by some sources. Significant share dilution already happened. No long track record of consistent profit. And maybe the optics of those past SPV defaults.
Opportunities.
Oh.
Tapping into the explosive AI HPC data center market growth. Rising demand for sustainable computing fits their model perfectly. Growing adoption of cloud HPIs, leveraging their existing assets and know-how for the AI pivot, potential for high margin, stable AI revenue, massive expansion plan, Sweetwater, using Bitcoin cash flow to fund AI, benefiting from grid programs like demand response.
Threats. T. Bitcoin price swings and post-halving pressures. Rising global mining competition. Regulatory uncertainty. BC limits, Texas scrutiny. Intense competition in both markets, mining and AI HPC. Huge execution risk on the AI build-out. Time, cost, tech. Need for massive capital creates financing risk. That potential $100 in tariff issue. Supply chain risks, GPUs, ASICs. Delays in getting grid connections or permits.
That covers the main points from the sources, I think.
Yeah, feels comprehensive based on what we were given. So, Chapter 7, Conclusion, wrapping this up. IREN operates large-scale renewable power data centers, bridging Bitcoin mining and this big push into AI cloud services.
The strategy is clear. Pivot capital towards AI, leveraging advantages in power, and build capability, mainly in Texas.
Financially, things are improving, recent profits are encouraging, but it's against a backdrop of heavy investment, past losses, and volatility.
And the environment is full of opportunity, but also packed with competitors and regulatory hurdles.
So, connecting back to that first hook question, based on everything we've unpacked from your sources, can a Bitcoin miner really become an AI leader?
Well, the pivot strategy certainly positions them to try. They're aiming for that high-growth AI market using their key strengths: secured power, build speed. That time to power in Texas seems absolutely critical to their plan.
It's a massive gamble.
Huge gamble. The sources highlight the execution risks, the capital needed, meaning more funding, potentially more dilution, and the fact they're stepping into a ring with some heavyweight AI infrastructure players.
It really boils down to whether their ability to build big and fast can overcome those risks in such a competitive, cash-hungry market.
That seems to be the core tension, yeah.
So the final provocative thought for you, the listener, drawing only from this material. Considering IREN's really ambitious goal becoming a major renewable-powered AI player, does their proven track record of building infrastructure at scale outweigh the huge execution and funding challenges they face, pivoting into this incredibly competitive and capital-intensive AI market?
Something to think about. And don't forget to subscribe to Stock Analytics AI on YouTube.
Just a reminder, this deep dive was based entirely on the source materials you provided. Stock Analytics AI is an AI-powered research assistant.
Yep, and this is purely for informational purposes. It is definitely not financial advice.
Always do your own research. Maybe talk to a qualified financial advisor before making any investment decisions.
Good advice.
Okay, thank you for giving us the sources and joining us for this deep dive on IREN. We hope this helped you get up to speed quickly.
Keep pondering that final question.
We'll catch you on the next deep dive.